Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, August 11th, 2025. Hope everyone had a great weekend. So, as always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, or to get on the right side of market risk to the extent you haven't been following Kiss and Dr. Mo, you need to be a client of 42 Macro. So today's key macro question is, can the market continue looking through adverse trade policy outcomes? Our answer, NVIDIA and Advanced Micro Devices agreed to pay 15% of their Chinese AI chip sales revenue to the U.S. government in exchange for export licenses. NVIDIA declined 1% and AMD declined 2% on the news. The deal aligns with U.S. President Donald Trump's push to secure direct financial gains for America in trade negotiations, echoing Apple's $600 billion U.S. manufacturing pledge while also representing an unprecedented targeted export tax in modern corporate history. The quid pro quo nature of the arrangement may be challenged in courts, and it certainly undermines the national security rationale for the export controls. Thus far, Wall Street has largely overlooked companies making pledges to support the administration's economic agenda as the cost of doing business during a Trump presidency. We can envision a scenario whereby the market starts to push back on the increasing entanglement of the government and private sector, especially considering the relationship element of it, i.e., kiss the ring, get the green. Elsewhere, the domestic economic calendar is light on quantity but heavy on quality from an economic signaling perspective. By the end of the week, we'll have a much better sense of how tariffs and trade policy uncertainty are impacting the economy from a stagflation perspective. We'll also learn how tariffs are impacting the federal budget balance, as well as how the passage of the One Big Ugly Bill impacted the economy from a reduction of uncertainty perspective. Transitioning to our 42 Macro Dashboard, as always, I wrap up with a question from our community. This one's titled Inflation Risk versus Growth Outlook. It says, hi, Darius. Hi, everybody. I'm a new 42 Macro subscriber from Europe, and I found your work invaluable for navigating market risk. Thank you. I appreciate the kind words. It says, right now, I'm concerned that tariffs and deportations and slowing immigration could drive an upswing in inflation, as the attached recent chart from Apollo suggests, just as growth momentum is weakening. In such a stagflationary setup, I struggle to see the Fed cutting rates anytime soon. Obviously, this would be bad for risk assets. I hope I'm wrong. So our thoughts on this, I think we've been pretty clear about, the economy is in a U-shaped economy. We do have inflation trending higher over the medium term. We've been consistent with that as it relates to our sticky inflation view. With regards to inflation, however, I think it's very important to think about, taking a step back. When you're thinking about growth and inflation specifically, there's really three things that matter to asset markets. The delta, so what's the direction of travel for growth or inflation? It's the surprise risk, where what's it being reported relative to consensus expectations, and then there's the level, specifically, if we have below trend growth or above trend growth, that tends to have different outcomes, create different outcomes in asset markets, or if we have above target inflation or below target inflation for regards to the central bank's target, that also creates different conditions in and across asset markets. And so, with regards to growth, we have growth slowing in terms of our grid model projections and our fundamental research projections, two separate processes kind of arriving at the same conclusion. We have growth slowing, but likely to continue generally and persistently surprising consensus expectations to the upside, as evidenced by, what we talked about on Friday with regards to, or not on Friday, I want to say on Tuesday or Wednesday of last week, with regards to the positive surprises we continue to see from corporate earnings. I want to say through Friday, we had 453 of 497 S&P 500 companies having reported earnings through Friday. And I want to say there was a 81.2% beat rate for earnings. That's the highest beat rate we've seen on earnings since like the second half of 2021. And then I think we have like a 62-ish% beat rate on sales. That's also the highest beat rate on sales we've seen since 2021. I mean, 4 years ago, and so, the companies are beating and surprising consensus estimates to the upside. We suspect the same is likely to continue to occur with regards to growth, broader economic growth, even though we're still slowing in the context of the U-shaped economy. On inflation, we have inflation accelerating, but consensus has inflation accelerating at the same pace as our model. And so it may be the case that inflation just comes in line. And if it comes in line, the market's already expecting the acceleration. And so, as is the Fed. And so if we continue to see growth slowing, despite, the confirmation that inflation is in fact accelerating, I think the Fed will still, it would be wise for the Fed to focus on growth, because it is a leading indicator of the inflation cycle, as opposed to managing monetary policy with backward-looking data for the most lagging indicator of the business cycle. So I do believe that we're going to start seeing rate cuts in September, and maybe even again in October, but more than likely another one by December, despite the acceleration in inflation. Because again, I think now that we have Dr. Steve Moran joining the Fed board, I think with his entire job for the next 3 to 4 or 5 months is to convince everybody else on the Fed board that tariffs aren't inflationary. And obviously, he's one of the most brilliant academics he has one of the most brilliant minds from an academic economist perspective in the world. So if anybody can get there and talk some sense into these folks, it'll probably be him. And if he can't do it, then God help us all. So we'll wrap it up there. Darius here presenting our macro minute for Monday, August 11th, 2025. Best of luck out there today. We'll catch you back here tomorrow. Cheers.